In this video, traders, let's look at a double bottom trade for a big gap lower after earnings on a US stock. Stay tuned. Hey guys, warm welcome to you. Alright, so this is Datadog. Kind of thought I'd just put the video on now, watching this stock specifically. A little double bottoms form. Now, the pros and cons of this. Now, really, this doesn't actually qualify as a double bottom because you've only had a very short period of time between the up and the down move. However, when you look at how many phases we've had, this actually becomes not a bad little buy area. $80 buy area, fine. I think that's good for a couple of bucks. You could probably have a 50-cent stop. You've got a 4-to-1 risk reward ratio. There'd be a target, and there is your stop. That's how I play it. I think that's fairly reasonable. Now, why would you normally not take this kind of thing? Well, the first thing is, this doesn't really class double bottom. What you really want is a much bigger move up, a push lower, some sort of show of strength, and then a bottom. This is really just a downtrend. However, I think it's a little bit different because you have multiple phases. So you have phase one. That's phase one. Then you have phase two, and this is really the third phase, which very often counter trends and kind of moves up a little bit. Now, 82 might be a push if you're looking at it. Maybe actually looking at the market here. There's a lot of congestion around this 81.30, so perhaps the risk reward ratio isn't as good as you'd like, but I still think it's quite stretched. It's a reasonably strong stock under normal circumstances. Let's have a look at a daily chart on it. It's not too bad. It's come a long way. Yes, there's maybe a big head and shoulders there. Yes, there's earnings. It's not something you're going to go in crazy. It's not something you're going to bet the farm on. It's just one of these little trades that after you've at the open, you kind of had an hour worth of move, especially now we're coming up to the top of the hour. That's another good indicator that maybe the trend will change around this level. So it's about the right time to look for a little a 3-to-1. You've got 50-cent risk on the deal in at 80, 79.50 is your stop, 81.50 is your target. You can take these kind of trades all day long because your risk reward ratio is so quantified. And as long as you're not piling in again, if you get stopped out, you leave it, you go to the next vehicle. You don't look at it and go, I'm going to have another go. You just kind of leave it as it is. Let's see if we can get rid of this thing now. We know it's exactly the right time. You just leave it as it is and say, well, if I catch it, then great. If I don't, then fine. And then again, if you catch it, you don't try and be a hero with it. You're trading against the trend. You're kind of trading a counter trend move. You revisit again later in the day, maybe for even a breakout to lows. You always try to, this is the way I look at things, guys. You always try to segment off your idea and your theme for the time of day you're trading. So the theme is, hey, we're overextended. We've had 3 pushes, expecting a cycle back. Didn't really push aggressively to new lows. But if we do, got a very good quantified place for the stop. $80 seems to be holding. If it doesn't, is your 50-cent stop. You're going to get a bit of slippage, of course, depending on what size you're trading. If it does rebound back up, 81.50 is not an extreme level to look for. I mean, some of you may like to kind of hold the trades for longer, move up to perhaps the VWAP. Like the initial kind of target that I put on there was 82. I don't think that's that unreasonable. It's just this congestion here. For the sake of 50 cents extra, I think, that's not a bad trade. A little 3-to-1 deal. You can take those and see how it goes with that. So let's see what happens. All right, struggling with this last high. The last high here is 80.85, and it pretty much stopped on the button, 80.85, which tells me there's a seller there. However, many people kind of want to drag the stop up as soon as it does that. I get it. But, it could kind of sit around and do nothing for a bit before it breaks. Now, if it had broken through, failed, and come straight back down, then, yeah, I think you pull your stop up, you go, what, selling is not over and done with yet. It's tried. There's still a seller on it. Momentum's tried, but it hasn't got enough. We are still in, a kind of early phase of a short-term reversal. You've had 3 good up bars. This is the first time we've had 3 good up bars. You'd want to see it kind of bid now. This is a 1 minute chart, by the way. You'd want to see it find a bid now, really. If it doesn't, if it rolls back down, maybe it's going to do one more hold at 80 and go again. This is the kind of game you play. You kind of decide for yourself how you want to trade it and what you're looking at. And I think that if you're too eager to drag it to break even when you're going counter trend, you just get frustrated and stopped out. It's not a big stop. It's a reasonable position for a stop. The likelihood is you get stopped. It's a 50-50 trade in my view. I think it's 50-50 play, but it's got the risk-reward ratio that makes it worth taking. And yes, it's counter trend, so you're not going to be going crazy, like I say, but all it needs is a little bit of a shove. I think if it takes out this 85 high, we'll run through the 81s, and you start to going to get some trade happening at 81.40 to 50. Now, are you going to be stubborn with this, and are you going to say, well, it's got to be 81.50 on the dot? It's up to you. If you want to leave a pending order in, then that's fine. If it kind of goes there and stagnates and starts to put some wicks in and mess around, then you might want to close it straight off. You might want to start to scale out the position. Again, we're kind of struggling now with this 80, 85 level. I think this is now where you kind of reach your price action. You go, right, we push a little bit lower. This is we have got some strength off the low, but it's not monstrous, is it? Look in the scale of things, it doesn't look that great. And if this was a first drive lower, it'd probably be all over this for sure, especially if it popped up and went down. But the fact that you've had the 1, 2, third, and this is kind of a third counter trend, you're probably thinking, okay, now what's another place to put your stop in this type of deal? Another place to put it is to literally do this and go, okay, well, as long as this uptrend holds, I'm going to stay in. And I think the longer you kind of mess around here, the more chance you've got of it holding. And if it does reverse, you want to be out. So anyway, it looks like we're pretty close to our target here now. This is the point now where you don't want it to reverse. So when it's got to within one big shot of hitting the 81.50 level, and it hasn't, this is where you become reasonably strict now, because this is the level where shorts would want to probably press it if they could, and so you don't want to be caught out with a full reversal. So you'd probably now put your stop up to 80.75, something like that, and go, right, 80.75, that's the kind of level I don't want it to go to. And let's just see if it kind of gives us the fill. 47s, 49s, that's probably a lot, isn't it? I think, yeah, you want what did it go to on the high on that? 49. So, this is where you go, fine, what, I got the target, it didn't quite get the 50s, it is what it is. You take a little bit of slippage, you take it out, 28, whatever your fill's at, done. And that's just literally the kind of counter trend trade. You're not looking to be a hero, you're not looking to do anything amazing. Now listen, how we can review this is we can say, if it had monstered up and really, really ripped, you might be a little bit more cautious on it. You might go, you know what, maybe I just need to let it give some room. Maybe there's a lot of buyers coming in. But the fact that it took a reasonable amount of time, the fact that it crept up, the fact that it's kind of messing around, the fact that it's, very slow, tells me that the buyers aren't that keen yet. And there's a bit of selling coming in, when you're above this 81. That was a very, very key level here anyway. We kind of spotted that from earlier. So you kind of got to look in things in context. And then you review it and say, well, actually, maybe if we take the view up out later in the day and hold, maybe that opens up some price movement to the high. If we kind of do some work below the low and then get a big bounce up, maybe that opens up some price movements to the high. If we hold at lows, come into the final hour, then maybe that's a kind of sign to indicate a little press more to the short side. Again, we're not looking so much at actual price, we're looking so much at the direction, the movement of price as it kind of flows up and down, how many phases it does, how many waves it does, and that kind of thing. So anyway, I thought it's quite interesting, guys. I thought I'd do a capture on this as it was rolling around, and we'll see where this goes afterwards. So it's hitting that 50 level again now. Just see if it kind of breaks through and does a little bit of a shudder, but you've got a lot of resistance here. I think finally, while I'm thinking through these things, I think when a lot of people make the mistake of buying here, they see the recovery, they see it kind of breaking out from this high and think, I'll buy here. We're not thinking about, now listen, could easily work, no question about it. But I think when you're looking at thinking the phase of the market, you know, we've rotated. This is a kind of very struggling rotation phase. It feels like it wants to do a little bit more work or stagnate a little bit or catch up with itself a little bit before it rips off. Can it rip off? Of course it can. But I think when you look at these in kind of a lot of them, there's my Upwork alarm. Let me just have a quick look at that, guys. Good stuff. Let's go back to Datadog. You know, I think when you look at these kind of scenarios, you've got to think of the phases that we're going in. The phase is, hey, it's got one creeping way up to that level. You know, let it unwind again before you take another go. Anyway, that was Datadog. Thought it'd be interesting to kind of capture that and kind of talk through what I'm thinking as I'm looking at the price.